Good morning and welcome to the market forecast. It is Friday. Happy Friday, everyone. June the 25th. I'm John Hoagland. Thanks for trusting me with your time. We hope that you've had a good week. We know it's been a challenging one. We've had some very small ranges in our equities. The VIX is holding steady here. We're just under 16, so we can expect some smaller opportunities, but perhaps more of them. As always, we'll be looking for accurate context, always thinking about risk management first, and then, of course, trying to stay patient. Very important things for us in trading. This morning at 7:30, the personal incomes and outlays came out. Equities, you had a little bit of a knee jerk to the upside, kind of liking what they're seeing. We're still waiting for the Michigan consumer sentiment at 9 o'clock Central this morning. And there are three talking Feds speaking throughout the day today. So try and keep one ear out for what they may say. As far as other news is concerned, stocks set to open higher as the president yesterday announced a $600 billion infrastructure deal backed by a bipartisan group of 10 senators. And then in a little while later, he made it not so easy. I don't think it's going to be quite that easy. The Nike is the talk of the town this morning, reporting a blowout quarter in the second quarter. Stock was up about 11% pre-market. Companies set to pass 50 billion in annual revenue this year. Well, Nike, maybe you can just do it. Crude prices remain range bound as the next OPEC meeting begins July the 1st. Expectation is to pressure a rise in output with pricing at $73 for WTI. Maybe they can start to make a little bit of money on that. As always, make sure you like, share, comment, question, feedback, and heckling. Hit the like button for luck. As was mentioned yesterday in the chat here, VIX still holding below 16, 1590, relatively steady. Dollar index took a little bit of a dive after the numbers this morning, down at 91.66 in the 10-year yield, right where it was yesterday morning at this time, 1.49%. As always, got to say good morning to everybody. And we have Tone, first one in the room. Thank God it's Friday. Absolutely. We are in the final furlong of the week. We get a couple of days to rest up and be ready for next week. Brian, good morning. Theo, good morning. Vince, good morning. Caesar, Tanya, I was thinking about you last night cruising around in your electronic car. I have yet to have taken a ride in an electronic car. I bet it's really kind of quiet. I would think. I don't know. Let us know. John Huckel, note to self, remember it's Friday and summer trading. Yes, Raymond McClellan, new name there. Welcome, Raymond. If this is your first trip to the market forecast, thanks for letting us know you're here and saying good morning. And historically bullish market. Note to a perpetual fader right here. Absolutely. We're gonna take a look at some of the things on the charts. I mean, we've come a long way, especially in the S&Ps, in a short period of time. Fridays are always I'm always on kind of a warning for profit taking to come in on all-time highs, big up week. It's possible. Murph, Friday, enjoy it. Have a great weekend, everyone. Mine starts when Lacey and John are done talking. Lacey's lazing down on the chair on the floor over there. She says to say hello to everyone. Richie, good morning. Ryan, Nicholas, Brad, Generous, good morning. Keith, Zorain, Vici, good morning. Prince, good to see you. Good morning. George, Deanna, Colin, Rob T, good morning. Alan, first time here. Welcome, Alan. Glad that you're here. Thanks for popping in and saying hello, letting us know you're here. Greg, hi all. Hope you make money safely today, of course. Tim G and Tanya, fly out for vacation. I'll take you for a quiet ride. Maybe we'll go out to Roswell and check out some alien aircraft, huh? All right. Yeah, it's Friday. If you've had a good week, make a little bit of money and take the afternoon off. Good morning, PK. All right. All right, let's jump into the charts here and get business taken care of. As always, the daily and crude is where we start, just going from left to right, no particular reason for the order. And we've kind of fallen into, I would say, perhaps a little bit of an upside digestion. We're kind of holding largely below the upper trend line of the channel that we've been in. We are holding 1, 2, 3, 4. Today would be 5 days, closing above the important inflection level of weekly kickoff 72.75. The OPEC meeting is on the horizon, I'm sure, on the minds of investors as well as traders and hedgers. We had a nice little increase in open interest on this move off the low from here yesterday. We added 9,600 in open interest yesterday. That's 15,000 in the last 2 days. So these higher prices are attracting more participants, but the volume is not necessarily all that gratuitous. We've been kind of dropping off in volume, so we're kind of just in a holding pattern here. Our auctioneer is pandering, perhaps waiting for more information next week in the EIA as well as the OPEC meeting. When it comes to this kind of a situation in the markets, I always go back to the standard questions as what direction is the market attempting to go? Obviously, it's attempting to go higher. It's accepting at higher prices. The question then is how good of a job is it doing in that direction? I would say overall, with the open interest increase in the last couple of days, it's bringing more energy, if you'll pardon the pun, when crude oil here. It's bringing more energy, just not directional here just yet. The longer we stay up here, the more time we spend, the more it's going to look like it's accepting higher prices, unless, of course, we have some possible profit taking. Monday, Tuesday, Wednesday, Thursday, Friday. Big up day Monday, holding up here. We see some profit taking, could take us back down to another opportunity to look to 72.75 weekly kickoff high for another opportunity. Looking into the 30-minute chart now. Stan, hello from Taiwan. Welcome, Stan. Glad to see you're here. Thanks for letting us know you're here and saying hello. Here's the 30-minute chart for crude oil. This is going to be, I mean, it's already a pivotal area. There's so many confluence levels down at weekly kickoff high here. It just looks like there's a whole bunch of fish hanging there if we even get the opportunity to see that level today. We have last week's high, we have weekly kickoff high, we have value low from yesterday, we have point of control from a couple of days ago that has been checked in regular trading hours. There's just so much information here. It looks like just a rich area to look for an execution. Again, we may not get that opportunity. We've opened without a gap. We've opened kind of above value from yesterday. We've got a naked point of control above here, which is, where is that? That's up at 73.66. It's an obvious visual level. Is it, is that worth it just to get to that level? I'm going to be watching today to see if we reject value from yesterday and reaccept value from the day before to see a move perhaps to the way up. Do we have any overnight inventory? No, we don't. It's going to tell me that I really want to try and stay a little bit patient here. I don't think we've left the opening range at the low of the session yet. If that's the case, then I'll look for opportunities for continuation to the upside as long as that opening range remains the low. But again, overnight high, interesting. It's right by that point of control. Overnight low, part of the target-rich environment down below. So I'm going to be kind of focusing on those extremes. And now for the S&Ps. Okay. Again, I ask myself, what direction is the market attempting to go and how good of a job is it doing getting there? I don't think it's been doing that great a job. That may change now that we are showing signs of accepting above the previous all-time high that was in the overnight. We now have another new overnight all-time high. It looks like we're going to be opening right near there. We added 9,000 in open interest on the upside. Look how far we've come this week. We started the week here. We're all the way up here. If we can hold the weekly kickoff high, I look for this market to continue to rotate higher. If we can't hold the weekly kickoff high, last week's high, all of that, then there's always the possible expectation of a profit taking break. Markets that are directional to one side have sometimes some pretty vicious opposite moves. Tanya, does that put us in a reversion trade? Are we looking for those? We got to keep our eyes out for them. But if we continue to try and short a market that is driving higher, we know how that usually ends up. So, I'm more of a, what's the word we're looking for? Reversion. Contrarian, I guess, would be the word. But I've learned by putting my hand on the hot stove, you don't sell the S&Ps until it's time. When it's time, who knows? 42.58 is going to be somewhat pivotal to that. You got a 140-point rally throughout the session, throughout the week this week. Take a look at the 30-minute. Oh, hey, whoa. Just trying to make it so everybody can see, not frighten everybody. All right, so no gap close yesterday. There's plenty of unfinished business down below. It's going to take us to reaccept below this weekly kickoff high. We didn't settle above it yesterday. We've yet to settle above it. Maybe today's going to be the day. Last night, basically just kind of tap dancing on this level, somewhat magnetic, bouncing, going below, back above. After the numbers this morning, basically taking a look to the upside, knee jerk to the upside, looking for continuation in that upside momentum. If we start to one time frame higher, that's when I'm not going to be looking for any shorts. Tanya kind of talking about that now. If we're one time framing higher off the open, there's no reason to think that this market can't continue to go. These markets are very resilient. There's a lot of money out there. So looks like we're going to be opening with a gap. If we can't close that gap, Tanya, we're going to be looking for continuation to the upside if we can't close the gap. All right. Take a look now into the NASDAQ. Little bit of a different situation here. This is the 30-minute. Let's start on the daily. Get a pretty good bump in volume yesterday on this move to accept or close above weekly kickoff high. 2,300 additional in open interest. That's the estimated. We've got an inside day here in extended trading hours. The action to the upside, looking back, has been very organized. There's been very few points of control that have been left unchecked, very few gaps that have been left unchecked. This is a very organized upside move in the NASDAQ. No reason to think it's going to change until it does. Just this week, say we had a naked point of control down here. We have a naked point of control down here. Let's take a look at the 30-minute chart and see those. Okay. So in reasonable, reachable areas, day before yesterday's point of control is unchecked. The day before that, unchecked. The market tends to try and come back and recheck those as it steps higher. It's left those. We also had a gap that was left unfinished yesterday. We had similar situation in the S&Ps. Weekly kickoff high is here. Yesterday, we opened, we rallied, we broke, we rallied. Where are we now? Settlement. 14,354 and a quarter. Put that on your charts. Before the 7:30 numbers, we were sitting right on it. No overnight inventory. The market trying to push to the upside and attempting to do so still. The difference is there's no gap in the NASDAQ. We're in range and in value. That's going to tell me, maybe it's a better idea if I stay patient and wait for better trade locations as the day goes on, unless, of course, the opening range is left at either the high or the low of the session. So we'll watch for the opening range trade. If it doesn't fly, if it's too wide, if there's too much risk in the opening range trade, we don't have to take it. Maybe price will come back inside, halfway back in the opening range for us to take that trade. Always different ways to look at things, always different ways to skin a cat, if you will. Here's the 30-minute chart. Well, we're on the 30. Okay. So here, in range, in value, no real rush to get involved in the Nasdaq here. By the way, I'm looking at it. Gold. Our bear flag has turned into more of a area of balance. Okay. What are the balance rules? Well, when we have established areas of excess on both sides of the area of balance, we trade for reversion trades. We go contrarian at those levels. We look for shorts at the high of the balance area, and we look for longs at the low of the balance area until proven wrong. When does it prove wrong? When we accept through momentum, volume, and time outside of the area of balance. We lost 1,000 in open interest yesterday. Volume continues to be very low at this level. Doesn't look like there's too much interest or too much energy coming in with the lack of like momentum in open interest. So you're going to be looking for opportunities at the extremes. We've got some overnight longs in this market, 1776.70. That's the spirit. We've got some longs in this market. Okay, are they going to continue to try and press higher? If they are going to try and press higher, this is the upper extreme of the area of balance we've been in. Maybe a test of this trend line would line up nicely with this high for a potential opportunity for this market to come off a little bit. The low of the balance area, basically, I would call it just below the low of our overnight session. We're a long ways from that. So, there's just getting to be too many lines on this chart for me. Because now it's more of a box than a coiling or a bull or bear flag. So, if we're going to be looking to the extremes are up here. And if we're looking for the supremes, they're on Spotify. All right, let's take another look here in the euro and kind of what happens in gold happens and seems to happen in the euro, but this seems to be holding more of a bear flag type of formation, less of a balance area, more of a kind of a wander to the upside. The short time frame is kind of showing a little bit of a coiling activity here. We've got higher lows so far. We've got lower highs. It looks like we're going to be testing that, which would be the high end of this area of balance. Might be an interesting opportunity for us there. I thinking we're really in short time frame control here. The dollar taking that hit after the numbers from this morning has given us a little bit of a bid here in the euro. Still very low volume. Still not really stacking up too much here. It looks like today we may have a better day for volume. This looks like an interesting spot for us here. So again, we have overnight inventory to the long side. Settlement 119.50. Put that on your charts. We did not open with a gap. However, we do seem to be rejecting value and range from yesterday. This is going to be the high of our balance area. This is an interesting spot for an execution. It was left at a poor high. It's likely to be revisited, but what's it going to do? Is it going to extend above it, or are we going to see some excess or rejection for a move back to the downside? Again, watching short time frame levels tend to be respected when the market is largely, and as I'm hypothesizing, in short time frame control. Interesting spot up here. There may be some fish up here, folks. And the 10-year, it's taking a nap. Not seeing any major good opportunities here. It's centrally located in weekly kickoff high, centrally located inside last week's range, right smack in the middle of it. Low volume, open interest lower, 10,000 down 10,000 estimated open interest from yesterday. Nobody seems to care about this market. I don't know what else to say. It looks like a heartbeat. Boom, 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 boom. At least we know it's still alive, but nothing big as far as opportunity is concerned from what I can see. So again, overnight inventory? No. Are we outside of range from yesterday? No. Do we spend most of the night inside of the range? Yes. Did we? What are we doing? To me, this just looks like I said yesterday, no runs, no hits, no errors, nobody left, nobody on base. It's time to move on to the next inning. I'm going to keep this on the back burner for myself today. All right. As always, thank you all for joining me. I'm hoping that you all have a great trading day today, a great weekend. Pray for world peace. Be good to yourselves. Be good to others. Say a special prayer for those in Florida. What a horrible thing that is. And again, be good. Be good. Wash your hands. All those things. Stay humble, grateful, and creative in your trading today. Remember to say those prayers and have a great weekend. No recap as today is Friday, but we'll be back on Monday morning for the market recap, 8 a.m. I'll be doing the recap, the market forecast, and the recap next week. Dan's going to be a little bit busy, so I'll be covering him for the recap next week. Looking forward to seeing everybody there. As always, we'll be looking forward to the group coaching on Wednesday. I can put that link in now if you want to just go ahead and sign up for it now. We had a good session last week and some really good questions. It was a really good time. All right. Okay. Prince, you're welcome. Nicholas Sodaro, thank you. And get out there and have a great trading day. Again, if you've had a good week, nothing wrong with making a little bit of money and calling it an early day today. We used to say in the S&P pit, if you're still in the S&P at 2 o'clock on Friday, you're down money. So let's finish strong. Have a great weekend, and I'll see you Monday morning. Trade well, everybody.